So if you'll just acknowledge that on your screen so that you're able to join us and be able to do the chat and those types of things, that's great. So that being said, let's get started. So today is we had a break, but we're going to get into the food manager part two. Things we're going to talk about today is kind of some menu item pricing. And remember, I know that not everybody is in the food service and or the details and the weeds of preparing menus and pricing out and purchasing and all that kind of stuff. So we're going to try to give you an overall exposure to this information. If you do have questions, please stop, and I'll make sure that we try to answer those as best we can. But again, knowing that many of you aren't in this part of the business right now, but again, part of your training is to just expose you to these concepts going forward. Let's see here. So menu item pricing, what a menu sales mix analysis, what that looks like, and some of the terms and things that we do to try to prepare that menu and what the mix that goes into that. Some forecasting and budgeting, extremely important that we know the monies that we have available and then how to spend those and what we're going to spend them on going forward. Preparing those food and labor budgets based on our forecast, based on what we feel that we're going to spend over time. Obviously, to be in business, you got to have profit. So again, pricing your menu items, pricing the food and services that you offer at a certain level so that at the end of the day, there's a profit to be made on that. And then managing for that profit. What do we got to do? What are the levers, the buttons that we can push to make sure that that's what we're going for? And then we know the longer we're in this, we know there's going to be delta or a variance, or there's going to be we're either going to forecast too high, we're going to forecast too low. Mistakes are going to be made. So we want to manage that thing called variance when it doesn't match up to stuff that we feel that we should have been doing. It should have been this much money, or it should have been this much inventory. Why is something missing, or why are we over? Was that just a mistake, or maybe there's something else happening going forward? So the agenda for week 6, understanding the food costs, obviously forecasting and calculating those food costs, estimating our food production, right? Big time there. Certainly want to understand our labor costs. It's a big part of it there. Optimizing that labor productivity for the people that we have in the dining rooms, in the front of the house, back of the house types of things, and making sure we got the right people in the right spots. Scheduling overall, and then revenue collection and security. Going forward. Questions here?
Can you hear us okay, Tom?
We can.
Hey, we might be in business this time.
Okay. Super. Just starting the agenda, so we're all set.
You can't see us though, but that's okay. Oh, we're good
as long as you can see us.
Yes.
See and hear us. Okay. Get somebody else in here. Let's move on.
See what camera? It didn't.
It's not registered yet.
So I'm gonna mute us, guys.
Yeah, thank you. So let's get into understanding food costs. So the learning objectives in this particular session is defining that food cost, calculate the cost of sales, calculate food cost percentage, which we use quite a bit. What is food cost? What do we mean by when we say food cost? Well, it's really the dollar value of food used by an operation during a specific period. So if we're measuring every week, every 2 weeks, every month, every quarter, we want to know what potentially our food cost is during that time. Sometimes they mean the same thing. It just depends on your organization. Food costs sometimes are named by the same thing as cost of sales. I would rather keep them food costs because there's a lot of different things, in my opinion, that go in the cost of sales. But just going from the Hospitality Training Institute of Michigan's hymnal, food costs can equal cost of sales. Remember, when you run into these two types of things, especially when you're talking cost of sales, make sure you get a proper definition on how somebody is defining it in that operation, so that you know what you're using, whether it's the entire cost of sales or it's just food cost. Okay, there's two types of food costs. There's food and beverage, except when the beverage costs and the food costs are all lumped into one. So it really depends on your accounting processes. For many people, they average and put the two together. I will tell you, when I have a client that's in the hospitality market, I have them separate those out, because in my opinion, it's two distinct costs, and we want to know what's going on in each one of these different areas. Food costs have different margins and that type of thing. We want to make sure we're keeping track of what those are. And beverage costs certainly have different margins. And so we want to make sure that when we separate those out, we understand what's going on. And some people even go deeper into the weeds. In food costs, they separate those out in potentially, beef, chicken, seafood, different areas. And beverage costs, they could separate those out. Beer, wine, spirits, the higher level stuff, the liquors. So again, depending on how much you want to get in the weeds, you don't want to go too deep, because it's going to cost you a lot of time to keep track of that stuff. But I think you can get down to 3 or 4 of the food and 3 or 4 of the beverage, and do yourself a great big service by keeping track of those, and certainly understanding when something's wrong or there's a mistake's been made, or potentially opportunity of theft, that type of thing. Just good idea to keep your eyes and ears open for some of this stuff. Any questions, comments here? We know that food costs start when we purchase the food, right? So when we get products in, that process needs to be handled properly. We need to check everything in to make sure, one, that we got everything that we ordered and are paying for, and two, that if we didn't get everything in, what's going on? Maybe somebody made a mistake, maybe somebody just didn't ship something, or it was overlooked, or maybe we got something in substitution, or we got more of something that we didn't order and less of something that we did. So many different aspects here, but we want to make sure when we're checking things in that we got the right items, that we received the right items, because again, we're planning out our menu items and forecasting for the future, and we have to have the right items going forward. We want to make sure that we're controlling those food costs, order the proper amounts, right? Because if we don't order proper amounts, that they have an opportunity to sit on shelves longer, potentially create waste. So we want to try to eliminate that waste. We want to make sure that we're mindful of how long things sit on the shelf, or that they're in inventory, right? So we need to keep close eye on that. Should know that and have that written down somewhere as we check stuff in, so that we can check that pretty quickly. Now, when I say that, write stuff down or check things in, most of the time, almost all of the time, this is electronic. So it's going into a point of sale system, or it's going into a spreadsheet or a piece of software that you guys probably already have. So when I say that, it really means that we're taking it down. How we do that typically is going to be digital. We're entering it into the computer, so we know what we have. We know when the expiration dates are, and we know when we need to get it off the shelf so that it doesn't expire and therefore turns bad on the shelf. Somebody may use it and then serve it to a client, which in turn can cause issues with sickness. So again, trying to make sure that we're doing everything on the up and up. Questions here? Big part of this, right? Reducing that additional things that don't make it out to the client or the customer. So reducing waste and theft, right? So there's security techniques. We'll talk about, from inventory. We want to keep food from spoiling, from being stolen, and that type of thing. That's why we're always checking in with employees, right? Talking to them about their processes, how they're taking stuff in and out of coolers, how they're preparing stuff, doing that type of thing. Again, just staying on top of things. Want to make sure that employees are being heard. Do they have what they need? Those types of things. so they're not using potentially other pieces of equipment, other measuring devices, and that kind of stuff. So we know from our recipe experience at the beginning of class that measuring is important. If we don't measure things properly, then the quality, the taste of the food might not be the same. It might be worse, and so that could affect our customer service. People might not think that we're on top of things like we were. Maybe our portions aren't as big, or maybe they're too big, and that in turn really upsets the internal processes because we had certain things costed out at a certain weight or measure, and they're not being done that way. So we're monitoring things, right? Dishes being returned during service. If a particular dish that we're preparing comes back, if we're fixing a chicken type of dinner, a menu item, and it's coming back at a higher percentage rate, something's wrong, right? Maybe there's some spoilage in that mix or whatever the case is. So we want to monitor dishes being returned during service to make sure that we get on top of it as quickly as we can and to stop whatever's happening, right? We want to make sure that we are note the reasons for these returns, right? We want to understand portion sizes, controlling portions, super important, right? To make sure that we're on our standard food costs. Excuse me. Tools that are essential for accurate portion control. These can include all these: scoops and ladles and serving spoons, serving dishes, the ramekin bowls and cups, and the portion scales, that type of thing. Another mechanism for ensuring that portions are the right size is to portion any item that can be pre-portioned. Excuse me. Let's start again. Another mechanism for ensuring that portions are the right size is to proportion any item that can be pre-portioned before serving. Some preparation can be made here and some cannot, because if we have some of that food sitting out, certainly if it's supposed to be refrigerated, so we have to pick and choose what we can pre-portion and that type of thing. Todd puts something in the chat and it says the 4 Ps. What are they? Do we know what those are? The 4 Ps? Nobody?
On staff.
Food staff. What are the 4 Ps? There we go. Do we got them all on there?
I say that because we started a new semester. In the semester that we are focusing on, thank you, Lacey, we're focusing on 4 Ps: protein, produce, production, portion control, and personnel. So protein and produce go together. That's our food that seems to be high right now. So those are what we're focusing on. That's what we're trying to. So it's kind of cool to hear this and hear you reiterate that to us.
So Todd, I'm going to pick on you just because you brought this up. So what's that mean? Protein and produce. What does that mean to me as somebody that's an employee?
So we have an increase in protein and produce when it comes to the overall cost of it. So protein's up 200,000 from last year at this point.
Maybe you can tell me this. This is going here.
Okay, let's mute Adam. And produce is up, I believe 75,000 for this little bit. So just kind of controlling those 2 Ps when it comes to food. Everything else seems to be lining up, but those two seem to be taking a turn, right? So
big red flag there, right? So we certainly need to pay attention to that kind of stuff. Could be a common explanation for that, or there might not be an explanation for that, or could be a mistake. But again, I think it's important that when you're concentrating on these 4 Ps, that if you have such a drastic increase or decrease, that we take notice of that and understand why that variance is in place, and what do we need to do about that. So
absolutely.
And again, going through all those again: protein and produce, production, portion control, which we'll talk about, and then personnel, which we'll talk about as well. So good stuff. So again, part of that exercise of doing that recipe, and as we continue to talk, and certainly when you guys start to report back to me on some of the things that you guys have monitored over these last 2 or 3 weeks, is that, are you following your menu specifications correctly? Is there something that we're not following and it's getting out of control because we're either not following the menu or it's just something that we're not even thinking about? Questions, comments here? Excellent. Our food costs, right? Understanding our menu. We want to understand what things on the menu are selling and what things aren't selling, especially the things that aren't selling. And maybe there's some reasons why. If there aren't selling, maybe we need to do some different things with that. Either create some combination type meals, buy one, get one deals and that type of thing to start moving some of the menu items. Okay. Communication starts to become a big deal here. Front of the house, what's selling, what things are getting, some compliments on from the front of the house needs to let the back of the house know. And then same thing.
Like we told that we came over and there was nobody. Everybody's going,
I need to mute that one. Hold on a sec. If everybody can mute until you need to talk, that'd be great. So communications front of the house, and then anything far as the back of the house that they have to let the front of the house know. Again, communication is huge here to make sure that, if something is amiss, something is wrong, there's a mistake, or there just need to be a compliment that's paid either front or back, going back and forth that way. Thoughts here? Okay. So just a quick definition here. Food cost is the actual dollar value of food used by an operation during a certain period. Okay, so again, that's just a quick definition, and it can include cost of all the food sold to our customers, our guests, given away, wasted, spoiled, incorrectly prepared, overportioned, over-produced, or even stolen. So it really includes everything. It's really what we purchased and before we start to prepare it type thing, right? Inventory really is the dollar value of food product in storage and can be expressed in terms of units, values, or both. We typically have this down in our point of sale system or in our software somewhere. Somebody has your organization has the ability to look into these systems to understand what's going on. So inventory is composed of your open inventory, that's a physical inventory at the beginning of a certain period where you're actually going through and counting the different types of products that you have. There's the closing inventory. That's the end of any given period, right? And really that formula for obtaining actual food cost accurately is open inventory plus any purchases that you made minus the closing inventory gives us that cost of sales, right? So this is mostly what we're talking about on this slide is food, but remember we said cost of sales could mean your food cost as well. But this is a good way to look at it. Your open inventory plus your purchases, then minus all that by closing inventory, you get the cost of sales. Questions here? Okay. So maybe we're looking over a month times frame. So we're going to put some numbers to this. So that open inventory plus your purchases minus that closing inventory gives us that cost of sales. So if we have an opening inventory of $2,500, so purchases of $6,500 minus that $1,800 worth of closing inventory, our cost of sales equals $7,200. Pretty straightforward here. Remember, on the exams, you're going to get that formula that's up at the top. You just need to know where those numbers go in to, so you don't have to memorize the formula. Questions, comments here? So we're going to get into food cost percentage and how that can affect or how that relates back to the organization. So really it's the relationship between sales and the cost of food to achieve those sales. We know that if sales go up, our cost goes up because if we're serving more food to the customer, obviously got to buy more food. So it's pretty proportional that sales and revenue go up, so does your cost of food. So the lower the percentage, the higher your margin, right? So if we can stop with waste, if we can stop with mistakes, if we can stop with theft, the higher our margin, because again, the lower the percentage, the higher your margin. So let's take a look at what that looks like. So we want to analyze our food cost percentage by comparing it to either what our organization expects of us, our historical costs, which your point of sale or your software is going to tell you, or if you know that you are going to be compared to other restaurants or hospitality organizations like yourselves, you can compare it against them. So you can either do company, historical, or even industry standards. Historical just means what did we do at the same time last year as far as our cost. You heard Todd when he talked about, hey, we're X number of dollars over what we were last year. So we need to take a look at that, and that's where we're going to start analyzing our food costs and our food cost percentage. So to determine that percentage, we want to divide the total food cost, which we know what that formula is, by the sales. So here's that formula. So total food cost divided by sales equals my food cost percentage. So as I said at the beginning of this slide, so we know food cost is a variable cost. The amount of food that we sell goes up, our food costs will go up, right? And we should be able to forecast for that. So it should increase or decrease in direct proportion to the increase and decrease of sales. Okay. So many times the food cost is determined by your manager. They'll come to you and say, hey, you're in charge of this. Make sure our food cost percentage doesn't go above X percentage, because that's probably something that's been a run rate for your organization for a while. So let's put some numbers to that. So if we had a food cost of $8,500, we know that for the month or the year or whatever it is, total food sales was at $27,490. 8,500 divided by 27,490 is 30.9% food cost percentage. So what's that really telling us? It's really telling us what our margin is. So if we take that 30.9 and minus it from 100 or $1, our margin of profitability is 69 cents to every dollar. That doesn't mean that's our total profitability. That's just the top part of the P&L. That, boy, we're starting out with every dollar that we spend, 69% of that is 31% of that is our food cost, and then 69% of that goes into running the company, and we have to divvy that up between other costs such as labor and utilities and other things. That's part of running your organization. Questions, comments here? Okay. Factors that affect that food cost, right? What factors could affect our food costs? Well, we know that once we start changing menu entries, that could change things, right? So there's reasons that things are, for the most part, popular. One, they're good. You do it well. But sometimes it depends on where it's in the menu. If something is on the back page, probably not going to be as popular as that menu item, if you have more than one page of your menu, by the way. If it's on the first page, you open the cover and it's on the first page on the right hand side. Typically that's the most ordered item or the most popular item, because it's right there. It's what the customer sees first, that type of thing. The other factors could be the sales mix of menu items and then raw product costs. Those are all three things that could factor in and affect food costing going forward. Again, we've already talked about this, that food costs increase or decrease based on sales. You have standards and controls. These are the things that you're doing, your processes of how you prepare stuff, how you measure stuff. All those things are set by the organization or by the manager, right? They're the expected outcome also, or performance by a team set forth by an organization. Maybe this is where they set the sales percentage. Maybe this is where they set certain performance standards for the back of the house, the front of the house, or both. And then controls are some of the tools employed to achieve or maintain a standard. If not followed, your food costs will not change in direct proportion to sales, and that could be a red flag. And that's why people are monitoring your P&L and your cash flow and those types of things on an ongoing basis. Questions, comments here? Okay, to continue on that. So some of the standards that were mentioned on the last slide, right? Step in and work more. If we have a situation of a manager that we need to make sure that standards are met and it's slipping, what would a manager try to do to fix standards that are not being met by the staff? Should they step in and work more on the line to get standards back? Or do you need to step back, evaluate, and teach? What are your thoughts on that? Anybody? Take yourself off mute. Evaluate and teach. Jamie says evaluate and teach. Who agrees with her?
I do.
Excellent. Excellent. Good. People are saying number 2. That's exactly right. Now, short term, that will probably slow you down even further because now you're taking somebody that's should be in production or on the line or on the wait staff and you're taking them out of the mix just for a short time. But we have to teach them how to do it right. Otherwise, you as a manager or as a supervisor will always be stepping in and working more on the line to get things back, right? Now, there's always exceptions. There are times when you absolutely may need to step in, but most of the time, just need to step back, evaluate what's going on. Is this person getting it? Do they not understand? What do we need to make sure they do get it? And maybe it's more repetition, or maybe they're not ready, or maybe it's just not for them, the hospitality industry. So again, we're not making snap decisions on this, but we do need to understand that step back, evaluate, teach so that we get the solution to the problem and we're not just doing a Band-Aid over it. So teach your team to evaluate the problem, to fix it, to understand what's going on, right? Remember that lost sales can result in lost profits. So some of the things that we want to do when we're doing a process is we don't want to shrink portion sizes. Why don't we want to do that? Who's going to notice first if we shrink portion sizes? Our regulars, right? The customers, and especially the regulars, because there's a reason they're coming to you, and they're coming to you all the time, is that they like a certain dish, right? And they're going to notice the first time you shrink portions or you change something in their dish. So again, they're going to tell you first. So again, they're going to notice. If you don't think they're going to notice, just try it one time. I jest. Don't try it. They're going to notice. They're going to tell you, right? If the food cost percentage is the same month after month, that is a good sign that standards, that you're measuring things out, that you're following protocol, that everybody's rowing in the same direction, everything is being done properly. But that doesn't mean we can take our foot off the gas as far as monitoring. We want to make sure we continue to do that. So when you're in a situation to where you're in direct supervision of food costs, what can you do to directly affect food costs? Okay, one of those areas is try to eliminate waste if possible. Sometimes it's not, right? So is that possible to, and certainly some of those that are in the food part of this class, is that could we incorporate food specials? Can we use unused hamburger in chili the next day? Those types of things. So what can we do to eliminate that waste? So food specials, lunch specials. We want to make sure that we're keeping track of where our waste is going so that we can identify patterns and correct that if possible. So these waste sheets are important that we log those, and we're looking for patterns here, right? Maybe we're over ordering, maybe there's miscommunication. Again, trying to make sure that we have all this stuff under our belt. Any other questions or comments under factors affecting food costs? So getting into forecasting and calculating food costs. Now, this is a little bit more tricky, right? So this isn't what we're going back in history and figuring out what our inventory was and doing the math there. We're actually going to guess, an educated guess, but guess what we're going to use going forward. So we want to explain how managers forecast food and beverage sales. We want to describe how to calculate beverage and food cost of goods sold. And then So big shoulders here. As a manager, you're not only responsible for the day-to-day operations, but you're also responsible for reducing costs and growing sales. So very important person in any operation is the manager when you're responsible for these items, right? Reducing costs and growing sales means more to the bottom line. For profit, being able to afford additional benefits, raises, those types of things. And we know the hospitality industry, not necessarily a high margin type of industry. So if somebody's really good at this, that's a bonus. So this is a rule of thumb. So, and I know this is a wide gap, but food costs typically represent about 25 to 40% of a restaurant's total expenses. The reason that gap is so high is that there's just different types of restaurants, right? From your fast food to your high level dinings and those types of things. So that's why the spread's a little bit higher there. So when we talk about sales forecasting, it really is a process to estimate food and beverage sales along with customer traffic and menu items based on a number of things, right? Same thing we talked about before: industry analysis, historical data, and economic trends. And again, your historical data of what you did in this same store or organization last month at the same time, last quarter at the same time, or last year at the same time, depends on how you measure it. And again, talking about the two different items, a food and beverage forecast, right, helps us make informed decisions and predictions. That person that's ordering the food has to understand and know this, because they don't want to over order, because things might spoil, especially perishable stuff, or under order. There's nothing worse than somebody ordering something and you're out well before the time that somebody's going to order again. So again, it's not the end of the world, but it certainly puts a thought in someone's mind that you've ordered something, and especially if you've ordered something that's pretty, not a rare item, but something that's pretty regularly ordered on your menu. And then it can be based really weekly, bi-weekly, every 2 weeks, on a monthly basis, quarterly analysis, that type of thing. Can you go back and change your forecast? Absolutely, you can, but it's good to make sure that you have, and you get better at the more you do it, but it might be foreign to you at first. It's not like we're shaking up that old 8-ball and trying to get answers there. We're trying to look into a pretty cloudy crystal ball. The more we do it, the better we get at it, because we have tools at our disposal. And that is your software, your point of sale, that really keeps track of what you're selling, what you've ordered, your food costs, your food cost percentage, all those types of things. There's a big number, though, that most restaurant organizations really need to keep track of, and it's called the food, labor, and beverage. We call it prime cost. That probably should be in capital letters. But food, labor, and beverage over a specific time is what we call prime costs. Okay, so depending on your organization, there's probably a certain number that you have to stay underneath as far as your prime costs with respect to comparing that to your revenue. We certainly want to keep all costs low as possible by budgeting, but you want to keep your eye on the biggest expenses, and that is your food, labor, and beverage costs. So keep an eye on your prime costs. So monitoring that prime cost. Why? Really, budgeting expenses begins with reviewing data from the prior period. So we get that information. You should have it somewhere right in front of you where you don't have to, pull it off of your P&L. You should have your software, and most of it already does. It gives you what your prime costs are for a certain time period. So whether you're always comparing the last 2 weeks, the last month, or the last week, you should have that at your disposal, right? So we want to make sure that your evaluated income statement and the profit, the income statement is the same thing as the profit loss, but making sure that you are monitoring that and evaluating that on an ongoing basis without getting too deep in the weeds. Again, should be, checking it from time to time, making sure that things are saying what they should be saying. And then you can also in-depthly study the P&L for any improvements for the next period. Maybe we did over order Maybe there was a mistake made that we needed to correct. Or there's a pattern starting and we're starting to see it on the profit and loss statement, right? So we want to make sure we're on top of that. And then review any trends so you can anticipate surpluses or shortages, that type of thing. So sales forecasting, industry analysis, historical data, economic trends, right? Ways to help with that forecasting. Our automated systems, point of sales, and anything else, whether we're doing spreadsheets, that helps us with the forecasting. It helps us, those projections help make the best informed decisions for both menu, preparing that menu, but also when people buy to support that menu, to make sure that we have things that aren't going to sit on shelves a long time and that we do have enough going forward. There could be events that change our numbers, right, too. We think we've done a great job of ordering the proper amount of food, beverages for a specific time frame, and then what happens? We have some bad weather in our area. Up in Michigan, obviously, we know we can have bad weather here. There can be events that are in nearby towns or in our own town. There can be your own supplier shortages. All of a sudden, there's an E. coli breakout, or a batch of avocados go bad. Whatever the case is, we've had there's shortages, and we have to adjust. And there can be a number of different things that could affect our projections, and now we have to go to plan B or plan C. But trying to be the best forecaster that we possibly can based on the information that we're given. Questions, comments here? What do you think, if you're a manager in the hospitality market, what do you think the top 3 things that managers could be rated on? Who wants to either shout it out or put it in the chat?
Employee turnover.
Oh, biggie. Biggie, what else? Customer services, they say. What else?
Profitability.
Profitability, good. Anything else? So number 1, staff turnover. Number 2 is what most people probably know, but it just doesn't come to mind because of the other things, and that is the safety of your staff and customers, right? And then profitability, right? Controlling your food costs. Those are the top 3 things most all managers are rated on. Staff turnover, safety, controlling food costs, right? The 2 ways to control that food cost, right? The percentage of 2 ways to do that is percentage of sales method and the simple markup method. And what we're talking about here is really starting to price out your food for menus. How do we do that? And there's really 2 ways to control that part going forward. And we'll talk about that. So percentage of sales method is really food cost for a future period is estimated as a percentage of overall sales. So if we over the next month, so let's say we're forecasting right now for February, and we anticipate we're going to have a better February. Typically we don't, there's less days, but that's okay. For this example, we're going to have a blowout February for whatever reason. Our food costs, because we know our percentage, right? Our food cost percentage, if we increase our food costs $100,000, we know that based on our percentages, if we took that 30.9 that we had a few slides ago, we can just estimate our food costs are going to be there. And so we're going to have a good handle on that. So we should be able to do it that way, right? But we also may want to break it down per category. We talked about this a little bit earlier. Maybe we break it down into the meat. How well we doing with that protein, seafood, that protein, and then certainly your dry goods, right? On how well we're doing in those particular areas. A real quick example could be that we take our food cost divided by our sales price. We get what that our food cost percentage, and then we apply it. So we understand that we've increased we've priced it at 25% profit margin. That could be very good for that particular food item or that category. Okay. And we have to do this for every single menu item as well as all of our beverages, and beverages would probably move at a different rate as well. So if we're using the percentage of sales method, here's our dry goods. Our dry goods percentage of our total sales is 7%, right? So from there we can use that and being able to budget with that number. Questions, comments there? So again, we can take any category, understand what percentage of that category is of the total, and be able to increase or decrease based on our forecast. The other message, because this is the percentage of sales method, the other is the simple markup method. And this really does the same thing, but different way. It just depends on what you're most comfortable with. Is that it creates a forecast based on an increase of a certain amount based on last year's expense. So that formula is just whatever the current budget period food cost times the percentage cost increase is our projected food cost increase. Excuse me, our projected cost increase. So we would have to do it twice, and I'll show you the numbers here because we're throwing a lot of around a lot of terms. So in this situation for the simple markup method, if we know our revenue of our total sales of food is 280, but we know our dry goods is at 6%, that gives us 16,080, and then all we just need to do, because that's what we did currently, we know we're going to have an increase of our cost is at 6%, then we just add that 16,800 back into it. Now we get our new revenue at 296,800. So it's a little bit backwards from what we were doing before. We were actually getting the cost first. Here, whoops, I'm sorry. Here we're just kind of adding whatever percentage of increase we want and then adding it to the previous number. Questions, comments here? Again, on the exam, they're going to ask you, here's your revenue, which would be the 280, and here's your markup. Here's what you want to do higher, a 6% increase from last year or last month or last week. What would the total be? And put the numbers in the proper area. So we would just take that and put that in the bottom formula. 280 plus 16.8 equals 296.8. Okay. Most budgets don't account for everything, right? A lot of times we don't account for the waste. Certainly wouldn't account for theft if we don't know what's going on. And then some poor training because maybe we're not following the procedures, the protocol, the portion control, those types of things. So we want to make sure we're following those types of things because, again, we're budgeting as close as we can, and some of these things could kind of help us be off. We want to make sure that we're documenting any increases and decreases. So document anything that affect the forecast and account for losses because somewhere down the road, those notes might come in handy because we might see a variance or a discrepancy on our P&Ls, our profit and loss statements. So sometimes, I'm not saying that it's this organization, but sometimes our costs can go astray and we don't know why. So we certainly want to know our audience, right? We want to have good relationships with our employees, our servers, because sometimes they can have a bad day. They don't get along with everybody in the organization, and that can affect their performance. So again, communication with your team, understanding what's going on and that type of thing is always important. And again, red flags can appear for no reason, and we need to run those reasons down. So we also want to understand how much food is actually used in a certain time period. Right. So again, use your point of sale systems, your software to understand that. And then we also have a thing called utilization factor. And what this is a percentage of food that actually is served to a guest. Because we know we start out with a certain amount of food before we prep it and prepare it. And then what actual percentage of the food is actually served to the guest. So if we can keep that percentage higher, and I don't know if you guys track this or not, but if we can keep it higher than historically, that helps. But we have to watch certainly about the types of foods that we're preparing and prepping as well. We know that by the time you get down to using a pineapple, there's quite a bit part of that percentage that does get used as waste. So again, it just depends on the types of foods that we're actually using. Some other factors, the utilization factor really is the actual cost versus your actual prep cost equals the utilization factor. So be careful of that. Excuse me, not prep, as purchased. So your actual cost divided by your as purchased. So your as purchased cost is really that the highest cost, and then what you end up serving the customer is what's left over for your utilization. Questions, comments, thoughts there? So there is some cost of waste, right? Items that, and this could be just mistakes, right? Items not rung into the register because we're in a hurry, we're busy, that kind of stuff. Over portioning, theft, that all can be into it. We try to have all the food that is purchased to be utilized, but we know that's not possible to use all 100% of it. We try to do it though. Cost of the goods go up, but the amount made on the item is still the same. So you have to watch the backside. So if the cost of food goes up and we are slow to make changes on menu, that certainly could affect your bottom line, right? So if your cost of goods goes up, we don't change the menu for 3 years, I'm going to say that you probably are not making the same amount of profit that you would have that you would have 3 years ago. So you have to really stay on top of that. Did somebody have a question?
No,
Oh, go ahead.
sorry, it's our radio.
Oh, nobody had a question? Sorry.
We're good.
Okay. So again, we know that as purchase cost goes up, the actual cost will go up. Our food cost percentage should remain the same, but again, it may not. And if it goes up, we need to make sure that we're understanding why our food cost percentage is changing. So if they don't rise in the same proportion, that there's something going on. So make sure that we're on the lookout for that. Any questions, comments up to this point? Okay, so I have 1:49. We're going to take a 10-minute break or 11-minute break to 2 o'clock. When you come back, a couple of things: attendance, and then I'll ask for volunteers to present what you guys have been monitoring over the last couple of weeks, and get those, at least the first handful, out of the way going forward, and then we'll get back to the presentation. Any questions or comments before we break? Okay, we'll see you at 2 o'clock straight up. Thank you.
You doing okay, Chris?
I was like, oh.
I was take a video of you.
My husband gets so mad at me because I do that at night. We watch movies.
When do we know if anybody passed the test? Is that next couple weeks?
Oh, I mentioned that. Hold on one second. Okay. So let's move on. So we're going to get into estimation, forecasting, budgeting, those types of things now. Whoa, don't want it to take off here. Boy, just taken off. So learning objectives really summarize the procedures that many managers use to control pre-production beverage and food product costs, and then describe the tools that you guys use to estimate food production. Okay, so really we're trying to understand how much money did it take to make the meal compared to how much you get back from the sale. So it's really that delta, that difference that you charge. And you heard Adam talking about some of that stuff when he was talking about the burgers, right? That if he can lower his costs in hopes that students aren't going to take as many, that could certainly produce more revenue saved, as long as we don't drastically cut the quality, right? We know the burger size is going to go down, but would that cut the quality? It's still beef. It's still the same type of beef, but again, just cutting it down in portion size. So again, many different ways to do that. That's one different way. So again, production area contributes to food costs, tools to control the food and beverage costs and limit waste. And what is one of the principal causes of increased food waste? So we'll get into that. And the answer to that question really is overproduction sometimes by the kitchen. But again, might not be their fault. It's one of those things that this is what was forecasted for this particular area, and we produced those, and it wasn't going to be used by guests and that type of thing. So let's get into estimating food costs. Really, the biggest tool that we can use is our historical data, what we've done in the past based on our point of sale systems or our software, whatever we use to keep track of our historical data for our restaurant or our organization, right? So we want to make sure that we lean on that pretty heavy. We want to use a detailed production schedule to make sure that everybody knows what's going on, and it helps everybody concerned, from cooks in the kitchen to the people that actually buy the product. Our sales forecast is going to be something that we lean on, using census type of information as well as our order history. We're going to use our sales forecast. It's really about, our total customer count. We have that information in our point of sales or whatever we use to keep track of that. We have to understand how many customers have visited us in a certain time frame. And it depends, it really depends from organization to organization what you use, whether you use the same time last month, the same time last year, same time last quarter. It just depends, but or same time last week. So every Saturday night you have an average. And what we do with that formula is we kind of take our total customer count and really multiply that times the average check per person, understanding how much they're ordering. That's about as close as we can get right now. So again, that's the formula right there. So our sales forecast will really be revolving around that particular formula. So that check really estimates, the check really includes the appetizer, the entree, the beverage, and the dessert, everything. But not everybody orders everything. So kind of how do we do that? We'll have an example of that here in a moment. But this really kind of gives us an anticipated budget to work with for a given period. So a lot of these things are estimates, right? So when we're talking about check estimates, we got to kind of use everything because we can't really pick and choose, okay? And we know that sales history is the best predictor of what's likely going to happen. So different ways to do it, but one way is the sales volume over the last 3 years broken down by the day of the week. And you guys know, because of the way your cycle is there at Hillsdale, that you have different things that happen on different days of the week. And then, of course, you have breaks you got to worry about and those types of things as well, right? So the best chance of forecasting next Saturday's customer count is by going back in history and looking at what typically you do on a Saturday customer count and use that as the benchmark. Using your point of sale system, you're going to be able to track the revenues that you had. You record the items that were actually sold, and then report in various areas of the business, that type of thing. So an example going forward is that, an average check amount really is the average item price times the percentage order based on your history, which we've talked about, gives you the average check amount. So here's an example. We're just going to kind of do on an average person's bill or check, what the average appetizer contribution to that check would be. So if we know we have an entree average of $15.25, what would be the average contribution of appetizers? Well, if we know 20% of customers ordered an appetizer and we have an average appetizer price of $6.45, the formula is this: average appetizer price times the percentage ordered equals the average check amount. So if we put the numbers to it, if our average appetizer price is $6.45, we know that 20% of our customers ordered it. Our average check amount is $1.29. So again, we have a way, it's not an exact way, but it's kind of a, estimate of what our average check amount. and how much of that would the appetizer part be. Okay, so another quick example, the dessert, right? Average dessert contribution to the average check price or average bill. So again, average entree price 20% of ordered dessert, dessert $6. Same type of formula here, our average dessert price times the percentage ordered. We get the check amount again, 6 times 20% is $1.20. Trying to keep everything simple. Okay, so our average dessert contribution would be $1.20. So that being said, we'd have our average entree plus our average appetizer plus our average dessert. Now we get an average check total of $17.74. Not exact science, but close enough. It gives us an estimate, something that we can go on going forward. Who has any questions or comments there? Okay, pretty straightforward. We can do the same things with average beverage sales, right? Works a little bit differently here, right? Because we know that not everybody orders beverages. Sometimes they just order water. But again, we want to try to understand that going forward. So not everybody is going to order a beer, right? But average beverage price of a beer, I know it's probably more at your place, who knows? But percentage order, average number ordered, because we need to know it's not a bottomless. The reason we have to know the average number ordered is because, you know, this probably works different than soda or some of the other drinks. We charge them for every drink that they have. Most restaurants don't charge for more than one soda. It's just a refill. So here is another variable that we have to add into it. So we get an average beverage sales of $1.95. Okay, so again, a couple things going on. Our appetizers, our desserts, our entrees price, and of course our beverage. So what we do is now we do the beverage check average, our food check average, and our total check average, that type of thing. And then after all that, we want to make sure that we're forecasting our customer count and using our average check price. So our example would be this. Oops, did I drop one of those? I'll have to find. Looks like one of my slides is missing. Oof. So let's just, yeah, I guess it's not missing. It's much more involved here. So what we'll do is we'll go over the popularity index. So we're going to go over what the entire menu looks like here. So popularity index. So we need to figure out percentage of total sales and percentage by customer forecast. So here's where we're going to count our customers. So if we know, and I know this is very simplistic based on what your menu probably looks like, but just for instance, if those are the 5 different entrees that we have available, 22% of the people ordered our chicken a la king, 18 the roast loin, our broiled salmon was at 15, our roast sirloin was at 35, and our vegetable lasagna was at 10%. And that, as you see there, is it all boils down to 100%. Perfectly round number there, and it's only for simplicity, right? So by using the number of guests that we have, of 180 guests total for the time period that we're looking at, remember 22% ordered the chicken, 18%. So again, here's nice round numbers, and they equal 180 entrees that were sold for that given time period. So again, we're trying to understand and extrapolate out who's ordering what and trying to forecast our food costs going forward. So again, gives us a nice breakout. This could match what you've done historically. It might not, but it probably is pretty close based on the time, the day that we're studying. So if this was that Saturday, that's what we're going to be doing and looking at for that Saturday evening. Questions or comments there? Okay. Going to make a quick change or a subtle change here to labor, because labor is another big part of it. We talked about our prime costs as being food and beverage, but now we want to talk about the labor costs. And so our learning objectives is really understanding payroll, FICA, Medicare, and employee benefits that make up that labor cost, and explain how that cost of labor affects your operation. So first and foremost, what is payroll cost? Really, it's the amount of money spent for employee wages. It could be fixed cost, which that's mostly a salary. It could be variable, or it could be semi-variable. So a concept that I want to make sure that you're aware of, and that is payroll costs versus labor costs, right? So we know that payroll cost is really just the salary, just the money part of it. The labor cost is salary plus everything else, including benefits, your workers' comp, insurance, Medicare. And this isn't necessarily to the employee, it's mostly toward the employer, right? Because that sometimes is costs that employees won't see. But with FICA, you do see some of that stuff deducted, potentially benefits deducted from your paycheck. Questions or comments here? So we know that payroll cost is the gross total of the paycheck before taxes are deducted. That's total because it's coming out of the profit and loss. Gross total is before taxes. Net total is after taxes. Who pays FICA tax? The Social Security and Medicare. Who, the employer or the employee?
Employer.
You're correct, but also the employee. Both people are on the hook for that. Take a little bit out of both going forward, just so you know. Employee benefits paid separate from wages. Okay, what are some of the benefits that you guys are aware of that you guys might have?
Healthcare.
Good. What else?
Dental.
Vacation.
Say that again.
I think someone said dental, but
Dental?
I said vacation.
Vacation, excellent. All good benefits, right? Those are part. Some could include paid holidays, paid vacation, paid sick days, health insurance, life insurance, dental, company paid retirement plans, if that's an option, paid continuing education, and there's many different others as I go through these classes. Just little friends benefits, bereavement or grieving pay, or days that you get, those types of things. So again, these are paid separate than your wages, but just so you understand that that's part of the labor cost. If you're working, and I don't know what your situation is there, I'm assuming that it's not, but in some larger organizations, you certainly have labor contracts via the unions, and usually these are in large cities that has most of your labor contract, your wages, benefits, and working conditions are negotiated, and you must abide by the contract. Okay, so labor contracts could, and most of the time do, increase labor costs. Not a lot you can do about it. That's contractual between your organization and the union. But again, could be higher labor costs, higher wages, more benefits, production output, layoff procedures, disciplinary actions. Everything's got a place and it fits, and it's all negotiated. Questions, comments there? So when we're talking about labor and labor productivity, we want to make sure that we're understanding how it all fits together, right? How can we optimize labor productivity? Well, certainly through training, coaching, and reducing employee turnover. That's huge. So we want to make sure that we're giving our staff the tools they need to do their job, right? And that can include a number of different things, from training, which improves your skills and knowledge, increases your productivity and lower your labor costs because things get done faster, more efficiently. We certainly want to recognize and reward employees for jobs well done. And then if we develop our employees' capability, we certainly improve the entire organization's capability. But we know that that's not an exact science either, because we do have veteran employees. We have employees that have been with us only a couple of years, and then we have brand new employees. So their skill level, their experience level is all over the place at times. So a big thing, what we talk about is employee turnover. You may measure turnover differently, but the definition of that is the number of employees hired to fill one position in 1 year. Okay, and we know that turnover typically is normal. People will come and go, but we don't want excessive turnover, right? To where every week or so we got a new person. So we need to try to have some type of a retention program and offer enough benefits and pay to keep people happy in the things that they're doing. And then we certainly want to make sure that we're celebrating and developing employees that we already have, right? Giving them opportunity, recognizing, rewarding those people, that type of thing. The cost of turnover, it's probably a lot higher than when this presentation was made, but they estimate it's about $1,800 per open position. It's probably higher than that if you've been into this at all. Do we know what the highest reasons for turnover is? Does anybody want to care to make a guess or put something in the chat?
Management.
Management is one of those. Trusting.
Wages.
What is it?
The pay, wages.
Wages, absolutely. Anything else?
Environment.
Environment, right? The work environment. Long shifts, right? Overwork, another great one. These are great ones. So, absolutely right. What are the main three reasons for employee turnover? Not only just management, but if management's turning over a lot, that could be one. Unwillingness to increase pay, scheduling long shifts, or overworking your people, bad relationship with that manager, recognition is almost non-existent, and then lack of any opportunities to progress in your organization. And some people can't help that because an organization might be very small or very thin with management. So there may not be a lot of room to move. But if there is, and there hasn't been a lot of movement, or there's not a lot of movement, then that could be an issue. So excellent job. So certainly we want to make sure that, we get the best one-on-one coaching to improve productivity. And sometimes you have to look outside your organization. That's something that outside of what I do for HTIM, I do business coaching for all types of businesses to try to, help them improve. And I will tell you, that's probably one of the number one things that most of my owners and managers have an issue with, and that is really providing good feedback and reward and recognition. They don't do a good enough job. Just passing somebody and saying good job is not enough. It's really about letting people know where they stand and that type of thing. So you get some feedback as owner or managers from coaches like myself, and that is one-to-one staff coaching and workshops. But we also want to make sure that management's showing good possibilities of upward movement if that's available in your organization. Certainly investing in talent development and manager transitions, because sometimes if you've worked with somebody a long time and they get a new management job, that's difficult because they're friends with the people that were peers at one time and now they're managing those people. So how do we get better at that? And then setting up your staff for success, right? Some peer training, buddy system, making sure that we potentially buddy up with a veteran employee with a younger employee to show them what the processes are and how things should be done and that type of thing. So setting up your staff for success is extremely important. It's also important to understand and examine why employees leave, right? To avoid that high turnover. We certainly, again, want to recognize good employees for the work they do, not just an attaboy, but certainly recognize those through all kinds of benefit, whether it's a bonus or an increased salary or a one-time award, that type of thing. You want to pay fair and competitive wages for sure. That bonus program that I mentioned, competitive benefits and incentives, and conduct regular work performance reviews so the employees know where they stand and how they can improve. And then have an open ear, right? Listen to employees' ideas and what their goals are and what they're trying to accomplish themselves. And then find time to coach your employees, not control them. So again, a lot of different things we can be doing out there. Other factors that can affect lack of teamwork. It's dreadful coming into work because we haven't created that great working culture. We got lack of control. Quality of life is not there. It's, I get up and I don't want to come into work because the environment that's created is not the best. I think another thing we do is and it's broken. A lot of times you guys might be doing a great job, but overall from what I've seen, We only recruit when we have to. And when we recruit out of desperation. And then we don't get back to people. And it just is broken on both sides, but especially from the employer side. If there's anybody that I can lean to, is that we as employers have to do a better job of our overall recruiting process. And that includes getting back to people and letting them know if they've gotten far into your process, to let them know they did not get the position, because a lot of times they spend their time calling you back and you don't call them back, and it's just a mess. So recruiting is really broken, and we need to do a better job process and procedure wise with recruiting. Long-term goals, career opportunities might not just be there. And then inadequate standards that a lot of times they show up and they're not quite sure what they need to do or what they're supposed to do. Again, so many different factors here. Questions, comments, thoughts here? Okay. So describe how to create and distribute work schedules. So this can be a little overwhelming if you've never done it. So yeah, if you've never done it, so hang tight here, folks. I'll try to walk through as slow as possible on this. So what you're viewing here is called a master schedule. And some of you in the room may have, or on the call may have done this before, but this is kind of how we need to schedule people out and make sure we're understanding how much money we have to operate the schedule with and how many hours are available and those types of things. So as you can see out here, number of cooks that we have, number of servers, the host, if we have that at our operation, bussers, if we have those, and certainly bartenders as well. And we know right now this is for the position from the time frame between 3 o'clock and 9 o'clock. And obviously we're scheduling more people during the peak hours. We have some people opening up, we have some people closing, but again, trying to maintain and understand based on the amount of money that we have going forward. So scheduling, right? A master schedule that we just showed is a template that kind of shows where everybody's supposed to be at for a given period of time. So it's the full boat from the front of the house to the back of the house and everything in between. These are our best estimates, right? For a reasonable master schedule also needs to consider current trends, things that are going on that might affect that. It also anticipates sales, and then we also need to anticipate what we have available for payroll dollars and how to schedule those in. And then a crew schedule is a chart that shows employees' names and days and times they're supposed to work. And these should be posted as far as, as soon as you can. It's not shouldn't be posted the day before that particular schedule is rolled out. It should be given some time so that people can adjust and do the things that they need to do. And then what happens if somebody calls in or two people call off and say, I can't come in, that type of thing? Is there a contingency plan that you have in place? So again, that's just some of the things that we'll go over here, right? The two primary purposes for your master schedule really is to help ensure that we have the correct number of waged employees available so that the customers receive that prompt, efficient service and properly prepared food. So enough people in the front of the house, enough people in the back of the house. If we have too many, certainly customers are going to get great service, or they should, but can we pay everybody to be overstaffed, right? So some of that dynamic and some of the beauty in being a good manager is to be able to operate that master schedule appropriately. And then if something happens, maybe you have to ask somebody to go home prematurely or ask somebody to come in before their time. The second thing is to plan that wage and labor expense so that your budget goals can be met. So really the hours needed for persons in specific positions, straightforward formula here is the hours times the dollars per hour equals the total wage cost. So from that master schedule, your crew schedule is mastered. And then when we're preparing that crew schedule, some of those factors should be guidelines for scheduling minors, if that's something and somebody that you employ, right? 14 and 15-year-olds, what hours they can and cannot work. And then some of the guidelines for the Fair Labor Standards Act, so when they can begin work, and then when they have to when they have to go home, certainly summer hours and those types of things. So again, being up on all these rules, especially if you have younger workers, it certainly will make your life easier if you understand these and you won't schedule somebody that shouldn't be scheduled. Questions, comments here? We will go more into depth of this and the next topic as we go further in the class. So we know that revenue collection and security, right, that we're asking for payment, whether it be credit card, cash, debit cards, those types of things, maybe some apps, maybe right at the table now as you do some of this stuff, but we want to identify part of the collection and security system, understand the account payables impact on operation, and then identify and explain internal and external threats to that revenue security. So there's three parts really to revenue collection, and that is charging the guest, whatever it's on the check or a bill, collecting that revenue, and then protecting the operations cash assets, how you collect that and deposit that. So not all operations have safe systems and safeguards, right? So we need to make sure that some of this stuff is in place, or we need to monitor it. Charging the guest. So you got to be careful not to undercharge the guest, right? To charge them everything that they ordered. They may not tell you if they're undercharged, so that's why it has to be accurate. They certainly will probably tell you if they've been overcharged, if they're paying attention. So again, we want to make sure that we're charging the appropriate things that they've ordered, that we've delivered to the table. Do we know what the difference between a gratuity and a service charge is? Who wants to try that one?
I'll give a whack at it.
Go ahead.
So gratuity is typically added on to a party that would go to the server, and service charges kind of cover some of the back end, cost that it takes to do a event. So
Nice. Great. I appreciate that definition, because again, when you're talking service charges, it could be a number of different things, but you're right. Gratuity to the server, right? Service charge does go to the company or the man or something that was added by management to be paid by the guests for certain amenities. I know back when we had such a huge thing with gasoline, many of my clients added a service charge for gas because their prices, when they quoted, did not anticipate that gas prices were going to double. So to cover themselves, they added a service charge based on that. And then later, when the gas prices went down, it went away. Certainly, if you're doing banquet services and stuff like that, service charges are more prevalent. But again, that's kind of the difference. It shouldn't be looked at as the same. So again, gratuity and service charges are different for everyone. When you're collecting revenue, obviously you want to collect the exact amount of money that is on the guest check, plus the taxes, obviously. And then you probably going to use cash. Are you guys using any apps right now? Or are you still using cash and check and credit card?
Or the dining side of stuff, a lot of them are meal swipe, so it's just kind of removes one from their balance of meals or whatever. But
Yeah, got it. Yeah.
and they can also add money on a mobile app in some instances, but
So not a lot of
the dining hall, most the card.
Not a lot of cash is changing hands, nothing like that. So again, it sounds like it's pretty safeguarded there, but many places, when you got a lot of different forms of being able to collect money, we want to make sure that we're collecting revenue the appropriate way, whether the people use Apple Pay, Venmo, or whatever people use nowadays. But we also do some of this stuff too to identify the employee that's collecting the money in case there's been a mistake made, and then collecting the correct amount of money, right? And then, of course, properly recording the transaction to make sure that it all flows properly. Our hiring practices, right? We want to make sure that we, with our hiring practice, that they're not poor or that we have lack of training, because that could increase the potential of theft. So background checks are important. I don't know if you can tell if somebody's going to steal from you in a job interview. I doubt it. But again, try to conduct a thorough background check and a strict code of conduct and post it to make sure that all employees are aware of that type of thing. Policies and procedures, right? We want to make sure that we have these down in an employee handbook, so we know that ineffective or lack of internal controls can cause issues. And then be clear that the company has a zero tolerance for employee theft of any sort. So again, just that's the employee handbook side, or your policies and procedures. And then that those things, any types of controls, procedures, policies are distributed to those that have to see it. So especially controls limited to 1 or 2 key employees, that people that are doing deposits or are in charge of any type of books at any organization you work for. We don't want everybody to have the responsibility of that, but 1 or 2 key employees, to make sure that if something does happen, that it doesn't, there's not a lot of people that we have to check with, and that that the responsibility is spread out, not just one person, because then that creates some issues as well. So make sure that you have a system of checks and balances. Probably two key people to have expertise on responsibility. Internal threats, certainly employees, double charging, employees working together. There's been so many different, ways that people have stolen, some that are pretty complicated, some are pretty easy. We want to make sure that we're monitoring those, and we don't leave the opportunity open for people to be able to do any stealing of any type of monies in your organization. So internal controls, they say that 10% of people are always honest, 10% of people are dishonest, and 80% are less likely to steal if they will be caught. I have a higher expectation of the human spirit than that. I would like to say that that 80% is a lot lower, that people are more honest, but it's all about controlling the opportunity for people to be dishonest. So if we can get a good handle on that, I think that's probably the best way to do that. So you guys may not have to worry a lot about that, but some organizations, the dine and dash, understanding what that is, fraudulent credit cards, counterfeit currency can come into play, making sure somebody's using the appropriate credit card. So again, examining the credit card signature, compare the name and the last 4 digits, input the security code, ask the guest for a photo ID if you're not sure, or if you have some suspicion. And then as we go up the ladder in our organization, accounts payable, make sure that, we're making timely payments on accurate invoices. The cash flow and the supplier payments are all that. We want to make sure we're paying our bills on time. If we're trying to confirm orders, what documents should we use? Obviously from our purchase order, this is what we said we were going to order, and then what we received in our receiving report and packing slip when we check things in. So when we talk about supplier transactions, we want to pay invoices on a predetermined schedule established by business, not the vendors. A lot of times, whenever a vendor sends us the invoice, they send it typically consistently on the certain times of the month, but you don't always pay those on the same day of the month. So if you can, move some of that around. Say, you know what, can you send me invoices on this week, or the 3rd week, because that's when I usually go into, or my accounts payable tend to pay the bills at that point. So as opposed to being sporadic at any random time of the month, you can certainly shore that up and be a little bit more determined that way. We want to make sure that all invoices are paid are accurate and authentic. I mean, there is some fraud that goes on the back end with invoices. People calling, they're hoping that you as a accounts payable person are too busy to do any in-depth questioning about certain invoices. So again, make sure that all the invoices are accurate and authentic, and then minimize the amount of time and expense in processing accounts payable paperwork. So we want to make sure we condense that to try to do it all at one time, as opposed to do it over time when we forget and that type of thing. If there's any discrepancies, we want to make sure from a supplier, we want to make sure the purchasing agent requests a credit memo to make sure that we get credit, and they should be treated like their cash, which we'll talk about in a second. The invoice needs to be recorded under the accounts payable as it is, but then we need to get a credit memo to put against it. So, oops, sorry about that. Issue a payment to the supplier and record the payment after that. But again, most of you may not get into this, but when you get into, accounts payable, accounts receivable, that type of thing. Any questions, comments about anything that we talked about today? Anybody that arrived late, was there any questions that you had on the curriculum or any stuck areas? So here's the upcoming schedule. So we're meeting next week back on virtual. We have 2 virtuals in a row, and then we'll have our in-person and our food management test. We'll go online, or we'll finish up the financial management part 3. We'll continue to do the project case study presentation, so be ready. We won't do the Surf Safe alcohol prep because we already did that. I don't know how that snuck on there. And then this is week 6, obviously, but week 7, we're going to get into the financial management, and then week 8, we're back in person. So those look like they have some incorrect information on that, so I'll correct that for next time. Anybody have anything else before we close today? Good. Okay, folks, have a good rest of your day. Finish the week strong, and we'll talk to you in a week. And if there's anything that you need to get out to me, text or email me, and we'll get it straightened out. See you now.
Thank you.